Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. All right, we are jumping straight in today. Things are moving fast, the wires are buzzing, and our job here is really to cut through it all. We want to translate the dense stuff, the technical, the financial data, into the facts you need, like right now.
Exactly. Speed matters, but so does focus.
We're aiming to pull out those specific results, the actual numbers, the things that make you, the listener, say, okay, I need to look deeper into this.
And that's crucial in small caps, isn't it? Valuation can turn on a dime based on one specific number.
Yeah.
Maybe a recovery percentage, a drill hit, how financing is structured. We're bypassing the fluff.
Yeah, getting straight to the so what.
We're isolating the leverage points, the technical facts, the financial realities, showing you how they shift the risk or, signal potential reward. So where do we start? Let's maybe kick off with financing.
Let's do it. Metals first. We're talking ESGold Corp. That's CSES, ESU, and OTCQB, ESAUF. Big headline just dropped. ESGold Corp strikes $9 million financing and sales pact with Ocean Partners to advance Quebec Gold-Silver Project. Now, the absolute key financial nugget here, the thing that really jumps out, is how this $9 million facility is set up. It is, and they stress this, non-dilutive.
Okay, unpack that. Non-dilutive means?
Means they're not printing and selling a ton of new shares to raise this cash. They're actually repaying the loan with physical metal.
Physical metal. Specifically doré. Right, that's important too.
Explain why doré matters here.
Well, doré isn't, finished gold bars. It's that initial mix of gold and silver you get from the mine. Repaying in doré, it really cuts down on logistics headaches and extra refining costs compared to delivering pure bullion. Or even worse, having to find cash on the balance sheet to make repayments.
Right. Simpler, keeps the cash flow focused. But this deal, it's more than just the money, isn't it? Ocean Partners involved?
Oh yeah, Ocean Partners, they're a huge player.
Yeah.
A global metals trader. Getting them involved is, well, it's massive beyond just the check they wrote. Because it massively de-risks the project. See, Ocean Partners didn't just give them money. They also signed a long-term offtake agreement. They've agreed to buy 100%, all of it, the gold and silver produced from the Montauban project.
Wow, 100% locked in.
Yeah, think about that. It confirms the quality meets a global standard. It completely wipes out market uncertainty, sales risk, all those logistical worries right when they're trying to start up. Finding a buyer for all your output before you pour the first bar, that's a huge vote of confidence.
And the CEO, Gordon Robb, he was quoted basically saying this exact thing, that this approach lets them service the debt using operating cash flow, not by diluting existing shareholders.
Exactly. That's the kind of capital strategy serious investors look for. It links the funding directly to actually producing metal, aiming for phase 1 by, Feb 2026?
Yeah, February 2026.
So yeah, non-dilutive cash tied directly to physical output and a guaranteed buyer. That's about as good as project de-risking gets in this space.
Okay, switching gears completely now. From mining finance to the world of biotech. Quantum BioPharma Ltd. They trade on the CSE and NASDAQ, tickers the same for both. QNTM, the news. Quantum BioPharma moves its multiple sclerosis candidate closer to mid-stage human testing. The core technical piece here is about their MS drug candidate, Lucid-21302, which they call Lucid-MS. They've just wrapped up and got the final reports for 2 really critical preclinical safety studies.
Okay, which ones?
The 90-day oral toxicity study and also the toxicokinetic study.
Right, those are big milestones. Procedural, yes, but really important ones. Let's break those down a bit. The 90-day oral toxicity that's looking at safety over a longer term, right? 3 months is a standard benchmark to see if the body handles repeated doses okay.
Makes sense. And toxicokinetics.
That's about how the body processes the drug. Absorption, where it goes, how it's metabolized, how it gets out. The ADME absorption, distribution, metabolism, excretion. Basically, what does the body do to the drug?
So these reports essentially say, okay, in animal models, over 3 months, it looks safe, and we understand how the body handles it. And that clears the path for.
It clears the path to file the Investigational New Drug application, the IND, with the US FDA. That IND has to be accepted before they can even think about starting a phase 2 human trial.
Okay, so it's a necessary step, but IND acceptance isn't automatic, is it?
Absolutely not. That's the crucial context. Getting these reports done is positive, definitely progress. But the FDA has to greenlight the IND based on all the data. And then, even if they get into phase 2, historically efficacy trials, proving the drug works in humans, have really high failure rates industry-wide. It's a tough hurdle.
Good dose of reality there. But let's talk potential. If Lucid-MS does make it through, what's the goal here for patients?
Well, the potential is significant. They're aiming for something potentially first in class. It's focused on myelin protection and repair. See, a lot of current MS drugs manage inflammation or try to slow things down. This one is trying to actually repair the damage to the myelin sheath, which is core to the disease's functional impact.
So potentially restorative, not just managing symptoms.
That's the ambition. For the, almost 3 million people worldwide with MS, getting a drug aiming for actual repair into mid-stage human testing, phase 2, that's a major inflection point. That's where real potential value starts to build, both for patients and investors.
Okay, let's swing back to resources. Exploration results this time. Aiden Resources, Inc., TSX venture symbol AAN. Headline reads, Aiden Resources final drill results at Abu Marawat underscore high-grade potential in Egypt's eastern desert. And the numbers here, well, they definitely underscore potential. Check this out. At a structure they call JVZ, one hole hit 39.55 grams per ton gold and 161 grams per ton silver over 3.90 meters.
Wow. That's exceptionally high grade, bonanza grade, really.
And they backed it up with width, too, in the central vein zone. Another hole hit 17.70 meters, averaging 9.63 grams per ton gold and 86.5 grams per ton silver. Still very strong grades over a much wider interval.
Yeah, and seeing both is really what you want from a mining perspective. That super high-grade, narrower stuff, that gives you options for maybe targeting quick, high-margin production early on, kind of like mining the sweet spots first for fast cash flow.
Right, get the best stuff out quickly.
Exactly. But then having those wider zones, even at slightly lower but still really robust grades like 9.6 gram gold over nearly 18 meters, that provides the consistent tonnage, the predictability you need for a long-term scalable mine plan. It's that combination that offers flexibility.
Now, this is in Egypt's eastern desert. Any specific context there we should consider alongside these grades?
Good question. The Eastern Desert has a long, rich history of mining, and yeah, the Egyptian government seems supportive of developing the sector right now, which helps. But it's still an emerging market jurisdiction. Doesn't matter how good the rocks are. Running a large project anywhere like that adds layers of operational complexity, maybe political risk, that investors just have to factor in. The grades are fantastic, proof of geology. Now they need to execute on the ground.
And these drill results, they feed directly into the next step, right?
Absolutely. This kind of high-grade, well-defined drilling data is exactly what engineers need for the ongoing metallurgical work, the geotechnical studies, the environmental baseline stuff. It all builds towards the next major economic study.
Which is?
The pre-feasibility study, the PFS. That's where you really start turning drill holes into a detailed mine plan and economic model.
Yeah.
Having strong grades like this just makes that whole process much stronger from the get-go.
Okay, next up, different country, similar story of exploration success. Stellar Africa Gold, Inc. Symbol SPX on the TSX venture. News is Stellar Africa Gold, Inc. First hole at Morocco's Tichka S returns wide, high-grade gold, drilling expands. And their first hole, TCK001, really set the tone. Came back 13 meters, grading 6.12 grams per ton gold. That included a really hot section of 2 meters at 22.28 grams per ton. Not a bad start at all.
No, that's a fantastic first hole. Great width, great grade. But what's maybe even more compelling here, geologically speaking, is how the gold is sitting in the rock.
Okay, how so?
The release mentions it's hosted in sub-horizontal diorite sills. Now think about that. Instead of chasing gold down a narrow, possibly twisting vertical vein,
which can be tricky and expensive to follow.
Exactly. They're finding it in these relatively flat sheet-like layers, like the layers in a cake almost.
Okay, sub-horizontal sills, flat layers. That sounds simpler.
Potentially much simpler. If they can show these sills hang together, that they have continuity, then that kind of geometry is often much more predictable. It makes it easier and probably cheaper to drill out a resource accurately. And down the line, potentially much more efficient to mine compared to complex vein systems.
Easier to model, easier to mine. That suggests scalability.
That's the key word, scalability. Predictable, near-flat structures can support larger, more cost-effective operations. It's a very attractive geological model if it holds up.
And it sounds like they're moving quickly to test that model. The release says they're already nearly 500 meters into a 1,500-meter drill program.
Yeah, and getting excellent core recovery. Over 99%, which is also good news, means they're getting good quality samples. They seem eager to prove up that continuity quickly.
All right, one more story, shifting focus again slightly, this time to metallurgy, which can make or break a project's economics. Copper Giant Resources Corp, TSXV, CGNT, and OTCQB, LBCMF. The headline, Copper Giant Resources Metallurgy Win at Mulco points to simpler processing. And the numbers coming out of their Mulco project in Colombia, they are genuinely eye-popping. Bench scale tests showing recoveries up to 92% for copper and an incredible 97% for molybdenum using standard flotation.
Whoa, okay, 97% for moly in rougher flotation. Let's just pause there. Rougher flotation, that's like the first main step where you try to separate the valuable copper and moly minerals from the waste rock using bubbles. Getting 97% recovery of anything at that initial stage is really, really good, especially for molybdenum.
And why is that 97% moly figure so significant for them specifically?
Because it blows their previous assumptions out of the water. Their current resource model, the one they base initial economics on, assumed 90% copper recovery, which they basically hit, but only 75% recovery for molybdenum.
Ah, so they jumped from 75% assumed to potentially 97% actual recovery for molybdenum.
Exactly. That's a massive jump, 22 percentage points higher for a valuable byproduct. Molybdenum isn't the main event like copper, but it adds significant value, getting, roughly 29% more moly revenue than you originally planned for. That flows directly to the bottom line. It significantly boosts the project's potential net present value, the NPV, and the internal rate of return, the IRR. Huge financial leverage from a technical win.
Right, turns rock science directly into dollars. And this win also suggests the processing itself might be easier.
Precisely. The fact they achieved these fantastic recoveries using a conventional flotation flow sheet is key. It means they likely don't need some weird, complex, expensive, custom-built chemical plant. A standard flotation plant is much cheaper and faster to build, easier to get financing for, and generally simpler and less costly to run day to day.
So better recoveries and a simpler process. That's a double win.
Absolutely. And this technical breakthrough gives them the solid footing they need to jump straight into the next major study, the Preliminary Economic Assessment, or PEA. That PEA is where they'll officially quantify, in dollar terms, just how much value these improved recoveries add to the Mocoa project.
Okay, so let's recap this rapid-fire deep dive. We hit 5 really distinct, compelling updates. Started with ESGold securing that crucial non-dilutive financing plus the offtake deal.
Yeah, de-risking production.
Then Quantum BioPharma getting those key preclinical safety reports done for their MS drug, paving the way for the FDA submission.
A big step towards human trials.
Afton Resources hitting those spectacular high gold and silver grades in Egypt, confirming the geological potential.
Setting up the PFS nicely.
Stellar Africa Gold, finding that wide, high-grade gold in Morocco, but maybe more importantly, confirming that potentially very efficient sub-horizontal geology.
That layer cake model, yeah. Scalability.
And finally, Copper Giant, with that huge metallurgy win, much higher molybdenum recovery, using simple methods, boosting the economics for their Mocoa project.
Big implications for the PEA there.
A real mix of finance, biotech milestones, and exploration development wins.
And for you, the listener, remember, it's these specific hard facts we focused on, that 97% recovery, the confirmation of those flat sills, the C9 million non-dilutive structure. These are the data points that actually move the needle on valuation and risk in the small cap space. You need to grab onto these specifics for your own deeper research.
Don't just read the headline summary.
Exactly. Dig into the numbers, the structure, the science. Now, here's something to maybe chew on after this. Thinking about all these different kinds of wins we discussed.
Okay.
Which one provides the most durable, the most long-lasting value for a resource company, do you think? Is it locking in that guaranteed sales contract with non-dilutive cash like ESGold? Is it proving you have incredibly high-grade rock like Eston? Or is it demonstrating a much simpler, more efficient way to process your ore, like Copper Giant?
Good question. Durability.
Yeah, what provides the most fundamental lasting advantage and why? Something to consider. And definitely keep an eye on those near-term catalysts we talked about, that phase 2 trial start for quantum, the PFS for 8 and the PAA for Copper Giant. See how these facts we highlighted today actually play out in the market.